Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're going to talk about certain things that I think people misunderstand about velocity banking. So I know these days, velocity banking videos have gone on a resurgence, right? Because I remember in 2017, there were a lot of videos back then that had millions of views about velocity banking. And for whatever reason, people have a research interest in it again. So I talk about it a lot on this channel. And I've seen some comments where it's like, why don't you do an example of velocity banking with someone who's very low income? Well, the thing is that if you're at a stage of life where you're very low income, we have to talk about increasing your income or strategies to increase your income. And there are various ways to do that. One is just to get a better job, right? So if you don't know how like the job hopping game works, you could kind of look it up on YouTube. If you're a W-2 employee, the easiest way to get a pay raise is not to stick at your current job, but to kind of job hop every 2 to 3 years, right? So that's the easiest way. But there are other ways too. So let's say if you're more entrepreneurial, more 1099, then you have to do a little bit more hustling. And we do provide an income opportunity if you are interested in that, in growing a community with real estate and financial education. And go ahead and click the Google form link below if you're interested in that as well. Now, here's the thing: increasing your income is not the goal of velocity banking, right? And some people say, well, $5,000 income a month is not realistic for some people. Yeah, and I get that, right? But then that means you're not at the stage of life where you can use velocity banking, because velocity banking is a debt removal cash flow management strategy. Now, a lot of people who view this channel, the demographics are not like someone who's 18 or 19 who's in college working a minimum wage job and has $100,000 of debt, right? It's mostly people who are, let's say, working age, maybe 70 to $100,000. In fact, I recently talked to someone with six figures, and they're a debt up the wazoo, and they told me they can't, like, they feel like they're drowning, right? So so the whole point of velocity banking is, even if you get to a high level of income, you have to know how to remove your debt and manage your cash flow, which a lot of people are terrible at, whether it's lottery winners or pro athletes. In fact, the average pro athlete, I think after they stop playing, especially like football and NBA, they become broken like after 2 years, after they're out of the professional league, right? So a lot of people, right? Yes, they need to increase their income, but that's not what velocity banking is about. It's about debt removal and cash flow. It's a cash flow management strategy, right? And the thing is that what people don't understand is that when you make a lot more income, you are the bank's best target is someone who makes a lot of income and is terrible at managing their money. And I kind of go over this in other videos, but the main culprit of why they would be terrible at managing their money is through a principle called segregation of income, which I'll kind of go over in a little bit. So think about this. If you're low income and you have lots of debt, velocity banking is not really going to help you until you get to a point where you're at a comfortable income, right? And there's only two situations where I think this is possible. A is if you lied on credit applications, right? Credit cards or whatever, you lied about your income. And don't lie about your income, right? Don't lie on any credit application, because I think it's a federal law that you're breaking if you do that. Don't lie. Like, don't say you make $100,000 if you don't make $100,000 in a credit application and then just swipe up the wazoo, right? Or a student loan, which is a scam, right? So the student loan is the only loan out there that's not bankruptable and that's not properly underwritten, because on pretty much every other loan where there's some sort of credit involves, has some sort of an underwriting process. Even the credit application that's automated, at least it has an automated underwriting process. The student loan, because it's guaranteed by the federal government, and I don't know exactly how it works, but it's like they don't take the same precaution of loaning $100,000 to let's say a college student compared to loaning $100,000 to someone who's going to buy an investment property, So those are the only two situations where you would have low income and lots of debt. Otherwise, you can't get debt if you're low income. But it's totally possible because our student loan system is insane, right? But for most people who are at that stage of life where they have higher income, and the average household income, I believe, is like 70 grand. So with that 70 grand, you have a lot that you can work with to remove your debt and removal. So you can remove debt and manage your cash flow. And so if you're at like dealing with student loans, which I think is like the only viable situation where you have low income and lots of debt, or you started a business and quit your job and you swiped everything with credit cards, that's probably the only situation where you have low income or lots of debt. Other than that, low income and lots of debt is not even possible, because if you're truthful in your credit applications, besides a student loan, right? If you're truthful in your credit applications, you'll be denied for debt if you don't make income. Okay. Now, let's talk about this right here. Preventing the segregation of income. So I've talked to a lot of six-figure earners, whether it's through email or Zoom calls, and this is essentially the problem that they get into, right? So let's say they're making $6,000 a month, which is about $100,000, six-figure income after taxes. And then they have their expenses, right? So they might be close to, we'll say, $5,000, which at that level kind of does feel like a little paycheck to paycheck-ish. And so why would someone at this level not be able to manage their debt and feel paycheck to paycheck-ish? It's because of the concept of segregation of income. So the way that velocity banking works is that instead of putting your income in one place so that you can easily manage your cash flow and manage your debts, if you're working from your checking account, then what happens is, and I'm going to do an expense breakdown right here, breakdown, and I'm going to highlight this, do this. Okay. Then what happens is that, you might, your money is split up into too many places, right? 401k, credit card here, and credit card there, right? And again, I just reviewed someone's situation where it's like they're like this, right? And I might go over it actually in a live stream if I have that person's permission. And then they got loan one, and then loan two, and then right. And so savings. So again, your income is split all over the place. And let me go ahead and actually we'll make sure that this equals $5,000. So maybe you make a $2,000 a month 401 contribution, 500 here, 300 a month here, 200 here, 100 there, loan 600, 400, and let me actually just sum this up and see what we get here. So equals sum B5 to B12, right? So we'll say we're going to kind of max out our 401k contributions and then have some 400 in savings. And then the rest is in your checking for whatever reason. Or actually, let's just do this. The savings isn't necessarily an expense. So if we, let me think about this right now. So we'll just do checking, savings here, and then we'll put 400, right? So let me just take that off. And then now, so this should be 5,600 expenses. And then let me just up one of them. We'll put another loan here. So another loan 3. And I know that car loans have been getting pretty expensive, $1,000 a month. And so, as I said before, what happens is that a person's income comes in and it's split into many, many places. So 1, 2, 3, 4, 5, no, 1, 2, 3, 4, 5, 6, 7, 8. Split in this example, it's split into 8 places. And now we feel like we can't breathe because we only have 400 in our checking savings, right? And because it's split up the wazoo, we feel like we're living paycheck to paycheck. And that's the beauty of the velocity banking strategy, is that it easily allows you to remove and manage your debts, right? Using one operating account, which would be your line of credit. And we're trying to prevent the segregation of income. Now, let's take a look here. So again, someone might say, oh, why don't you use lower income? Yeah, well, again, there's various scenarios, but obviously more income is better because you get more cash flow, but you can also reduce your expenses. But it's not only about that, it's about managing your debts, right? And preventing the segregation of income. So if you're at the stage where you're low income, you shouldn't be getting lots of debt, right? And the only reason that you can get lots of debt is because of student loans, or you lied on credit applications. But other than that, when I was poor, I was kind of semi debt free, right? And I was afraid to do velocity banking. It was like, put my entire paycheck in a credit card. Oh no. But yeah, that's what happened. And now, just to kind of tell you a little bit about me, I paid off 25% of mortgage in a year. Who does that? Right? I got, and then now I bought a rental property, $100,000 discount, and then I'm off to pay it off in 3 years. Who does that? Right? Who does that? But people do, like me. And yeah, so again, I'm comfortable teaching this because I'm able to apply it in my life. But when I first learned about it, I was so poor and I couldn't apply it because I wasn't at the stage to apply it. But once I accrued some debt and I was at the income to be able to accrue some debt, right? Because the banks in general don't allow you to accrue debt unless you have some income. Okay. And so if you're low income, you shouldn't be accruing debt. And the banks usually deny you unless it's a student loan because it's guaranteed by the federal government, or you lied on your credit applications. Okay. All right. So I hope you learned something here. If you're interested in joining our group and learning more about not only velocity banking, but financial and real estate education, go ahead and click the Google form link below. Otherwise, leave a comment if you have any other questions, just random questions, and we'll try to answer them. And we'll speak next time, and hopefully I'll crank a little bit more videos later today because today got a little bit of free time. All right. Bye, everybody.